Hello, today is the 6th of July 2011, and we'll take a look at the ratios for the precious metals. There will be six of them using gold, silver, platinum, and palladium. We'll start off with the gold to silver ratio. This tells you how many ounces of silver you need for 1 ounce of gold. And when this started back in 1968, the price of gold was $35 per ounce, and silver in the area of around 2, making the gold to silver ratio around the historic 15 to 1. The ratio would continue to go higher as gold was going higher, silver was going higher, but gold was outperforming silver. In 1979, when all of the metals were moving big time to the upside, silver outperformed them all. Thus, the ratio came back down to its historic 16 to 1 level and then continued to move towards the upside. The biggest and most important level right now, I think, for silver is in the area of around 44 to 1. Roughly this line in here. This was an area that was resistance in here that uh, came up to this level here and then stabilized in here, finally broke above this level, had a test of this mark, and then made a higher high, then came back to this level where it found support and made a lower high, and came back to this level and made a matching high. And well, the second time it broke below. So this is a double top formation. When you have equal highs, equal lows, and you break through the level of support, there's a double top formation. Based on the length of this pattern, what I can do is draw a straight line from this top towards this neckline and then just move this down. That gives us an area approximately close to this previous level of support and resistance, because really there's only two key support levels on the way down. This is the first one, which is in that 26 area. If we find resistance at this 44 here, which was support before, and then break lower, the odds of going below here increase, but we'd probably make it to this level where we would maybe find a bounce. And I say maybe because that's just your next area you would expect based on previous resistance and support, as well, of course, as the matching length of the double top. Breaking below that level brings you to the previous support level or the historic level of around 16 to 1. So those are the important levels. It's the 26 to 1 if we break below the mark of 32. And then on the upside, we're at it right now at 44. I guess if we break higher, I would look between the Fibonacci from this high and this low. I'd be looking for the 61.8% mark, which would be approximately in the area of around 59 to 1. The next ratio we're going to take a look at will be the palladium to silver ratio. This tells you how many ounces of silver you need to get an ounce of palladium. And for the most part, it is traded within a straight line. The straight line or the straight range is approximately within a range of about 15 to about 31. There was a time before this mark where it was below the range, and then at the end of the 90s, it went really high because palladium topped in around 2000, whereas silver was bottoming at that same time. So that's why the charts have that similar kind of look. But what I see within this, it looks a lot like the dollar index from the 80s. This to me looks like one heck of a failed move waiting to happen. And the failed move is this obvious break above the 31 level that got all the way up to the 200 mark, unable to hold back within the range. Or the failed move is that after it came down here, it did not find support here, obviously. But the failure to not have a fast move after the failed move. Now that sounds complicated. But the reason why I say this is because when I see this pattern of this high that we see from in here, and the market doesn't break below the support line and really come down towards the 6-7 mark, then that's a failure to me. Thus, the fast move would come to the upside. For now, I'm just going to say this is a very boring chart, and as long as it's within the area of 15 to 31, it is very much in the neutral camp. Next up is platinum and silver. Let me just find it on my series of images, and this is it right in here. The pattern here has these highs, which has been violated by now, obviously. There's the higher high and higher low pattern it was facing for about a quarter century, and that has come into pass. The significant support line in here, like in gold, is that of around 60 to 1. And at the 60 mark, which was resistance in here, it got above this line, found support, again found support, and now is broke below. Now, what did not happen, what I'd be thinking of, at least back in here, I'd be thinking of a head and shoulders pattern, because you got the left shoulder, you got the head, and generally when you find this level of support you haven't seen in quite some time, you'd usually bounce. Keyword is usually. That means sometimes you don't. Therefore, it didn't do it. This is weaker than that of a regular head and shoulders pattern. What I'd be looking for now is this key level of support of 60 to be that of resistance. Because if we make any type of moves up to this level, I would like the chances to be favorable that it'll start to roll back over again where previous major support would become that of major resistance. Breaking below, we got some support roughly in this neck of the woods in here. This was the level that was resistance and support in here. Support again just a little while ago when silver got up to $50 per ounce. Breaking below this level brings us back to its previous all-time low on the ratio of approximately 21 to 1. Alrighty, we got 3 more to go. We'll now go to the gold to palladium ratio. This is how many ounces of palladium you need for an ounce of gold. At one point up in here in 1980, when gold was near its top, you needed close to 7. Then it went down to a quarter. In fact, you needed 4 ounces of gold to get 1 ounce of palladium in 2000, as gold was around $250 an ounce and palladium around 1,000. Since then, palladium has dropped about 20 plus percent, 30%, and gold has just skyrocketed towards the upside. Now, just like the silver with the palladium to silver chart, you can see in here how you have the significant support line here, and majority of the action happened in here. The significant support level, roughly around 2.25, which was support for quite some time, has been resistance in here, tangled with it, and then boom, got above it. But lately, it did not find support there and hold. Now, it did find support there because it bounced in here with a green candle, now breaking towards the upside. Breaking down below here is what I would consider to be a dangerous break, thus changing the sentiment of the market. However, if it manages or can find a way to manage to find support, even though it's pierced below at this line, and it needs to hold the $1.75, then this would be a nice little massive potential upside target because of this failed move back in 2000. Again, though, it could very easily be choppy where you bounce above and below this line. But this kind of does make me wonder where I see this failed move from the year of 2000. Alrighty. Next up is gold to platinum. Platinum and gold. Now, did we already do this one recently? I don't think we did. If we did, I'll just go over it again. But looking at this, you can see a big resistance line roughly here around 1 and 1.35. This is how many ounces of gold you need for an ounce of palladium. At this point here, there's really nothing much to say here other than the volatility is low. If you look at all the other 5 charts, you'll see the move from the lowest point to the highest point within the chart is a lot bigger on the other ones than it is here. If we take 2.25 and divide it by around 0.75, then that means the movements have hardly been big whatsoever. Palladium and platinum, excuse me, palladium and silver overall are very volatile, where gold and platinum are not as volatile of a chart. Final one is platinum and palladium. The platinum to palladium ratio. Same sort of deal in here. That little failed move. It's now back to its previous support level in here. Maybe it's going to make one of those a little bit of inverted head and shoulders kind of formations. Don't know, but pretty much sideways for the last 40 years plus or so, with the exception of in here, in a range of about 2.25 up to about 5.5. Thank you for tuning in and have yourself a great day. Bye bye.